Onstott, and it's great to be streaming along with you here. You may or may not know, but the Federal Reserve is set to meet in December, actually next week, December 9th through the 10th, and they're going to be discussing whether or not to cut interest rates once again. Now, when this happens, it has a ripple effect, and one of the things that happens is that it affects the price of commodities. So I'd like to bring in Derek Macpherson. He's the CEO of West Point Gold. And Derek, thanks so much for joining me to talk about this today.
Well, thank you very much for having me.
Awesome. Okay, so Derek, I have to ask, for those who are unfamiliar, you're the CEO of a gold mining company. What does that mean? What do you do in your position? And we'll go from there because I have some questions.
Sure. I mean, besides talking to wonderful people like yourself, my job is really twofold. Our company is in the exploration business, so we're looking for gold in America, and we're trying to find more that we can mine here and create some good jobs with that. Additionally, though, obviously, this is a business where this is a venture capital business, and so we raise money and we talk to investors and we get our story out there to other people. And so really those are the two main things. And obviously I manage a team that helps me to do that as well. It's not just me.
That makes sense. I have to ask, so with this federal interest rate decision, we saw that gold prices spiked. Why is that? How does an interest rate falling affect the price of gold?
Well, the concept is that gold is an inflation hedge, right? And so what you want to have is that, and what happens is that when inflation goes up, which often happens when you have lower rates, your real rates get adjusted down, gold price goes up. And so, when people are out there talking about real rates are the difference between inflation and the rate the Federal Reserve is paying. Kind of typically use 10-year for that. But when they cut rates, when the quarter basis point cut that they're sort of forecasting for the next week, that rate closes, and so real rates go down. And so, as an investor, you want to own more gold to protect yourself against that hedge. Gold is fungible, right? That's the one beautiful thing about it, is that an ounce of gold here in the U.S. or an ounce of gold in Canada is worth the same in London, and it's worth the same in Russia, and it's worth the same in China.
Yeah, it's interesting because it's a commodity, right? It's not currency. So yeah, like it has the same value no matter where you're at. It is another question I was having and just thinking through this, right, is one of the things that people talk a little bit about is when is it a good time to buy gold? And as a CEO of a gold mining company, I'd imagine your answer might be all the time. But are there certain times where it might be more advantageous to make this a part of your portfolio than others?
I think anytime, and the answer is all the time, but because that's part of my job. But part of that all the time is that you have to look at what governments are doing. One of the things that we've seen globally, not just in the U.S. or in Canada, is a significant amount of deficit spending. There's a huge amount of liquidity coming into the market, and that liquidity and that spending by the governments actually creates inflation. And so now a good time to be adding to your gold position. It's oftentimes what people recommend is kind of like how you save. You buy a little bit every year, and eventually, if you'd done that since the year 2000, you'd be up 20 times on your investment. And so and so that's sort of part of the thesis, is like you do a little bit at a time, but you do it consistently, and especially when you've got government spending so much money and really driving up the cost of goods, right? If you look at the cost of milk or the cost of meat or any of those grocery staples that you see out there, that inflation or gold is a hedge against that.
Final question before I have to let you go, Derek. As you look ahead to this federal interest meeting next week, what do you think that's going to do to the price of gold? And any advice to people out there who may be curious as to how this affects each other?
Yeah, well, I would like to say that the price of gold is going to go up when they cut. The odds are right now, I think it's about 85% chance the market's pricing in that they'll cut. And so I think the surge of the gold price has already sort of happened. But I think that that confirmation and that will maybe give it a little bit more of a lift. As investors look out there, anybody can buy gold, right? That's the one thing that's an advantage. I mean, you can go to your local Costco and get gold, and and safely add gold, or you can buy it in an ETF, or you can buy exploration companies that have incredible leverage to it, like West Point Gold.
Awesome. Derek, thank you so much for your time today, joining the conversation and sharing a little bit about this topic. We appreciate your time.
Thank you very much.